Hi friends and professional colleagues, I am Manju Kaushik, manager at APAC Associates LLP. This is the 21st video of APAC's web series, that is One Concept, One Slide, initiated by APAC Associates LLP. This presentation is about the concept of single master form announced by the Reserve Bank of India in the first BI monthly monetary policy review dated April 5, 2018, with the objective of integrating the extant reporting structures of various types of foreign investment in India. In this video, we would also summarize the process and filing requirements for direct investments received by an Indian company in the form of equity shares, preference shares, debentures, share warrants, convertible notes issued by startup Indian depository receipts by way of fresh issue or through transfer. We look forward to receiving your queries, comments and feedback by any means given on this slide. The Reserve Bank introduced an online application, Firms, Foreign Investment Reporting and Management System, which would provide for the SMF. It was decided that the firms would be made online in two phases. The first phase was the first module, with the entity master, in which the entities including investment vehicles having foreign investment in India were required to input the data of their total foreign investment in India online as mentioned in the said RBI circular. The time period for the said reporting was from June 28, 2018 to July 20, 2018. As specified in the circular, Indian entities not complying with the prerequisite of this preliminary reporting through the online interface would not be able to receive foreign investment and be non-compliant with FEMA regulations. For creation of this entity master, every entity was required to authorize an official through an authority letter, known as entity user, on its behalf for the registration on the firm's portal, which would be the sole person authorized to add, update the foreign investment details of an equity entity in the entity master and would be entirely responsible for the data entered. During this registration process, all the requisite basic details of the entity user were required to be filed along with the authority letter. Then the authority letter was validated by RBI, and after RBI approval, the entity user shall receive the password on the registered email ID from RBI FID email ID. Lastly, the entity user was required to create the entity master mentioning the basic information of the entity and the foreign investment information since incorporation. Phase 2 is related to reporting transaction in the single master form. The first part of reporting is business user registration. The applicant reporting for the transaction at firms is required to register itself as a business user. Here I would like to mention that entity user registration cannot be used to report current transaction. The basic details, IFSC code of AD Bank and authority letter in favor of the individual in the specified format is required to be annexed along with the PAN in the application of this registration as business user. The AD Bank would then approve or reject entity's eKYC through email notification to the business user after the transaction can be reported in SMF. It is to be noted here that unlike entity user registration, business user registration is processed by the AD Bank whose IFSC has been selected at the time of application. The second part of phase 2 is submitting return to report the transaction by logging in the firm's portal with the user ID and password availed at the time of registration as business user. Upon first login, the business user would be prompted to change the password through a pop-up window. After logging in, the user may file any of the return as may be required by him out of the 9 returns made available through a single master form. The said 9 returns were made available in tranches, and they are: first tranche on the September 1st, 2018, Form FC-GPR for issue of capital instrument by an Indian company to a person resident outside India, Form FC-TRS for transfer of capital instrument between a person resident outside India and a person resident in India, Form LLP-1 for FDI in LLP through capital contribution and acquisition of profit shares, Form LLP-2 for disinvestment, transfer of capital contribution and profit shares in LLP. Form CN, issue or transfer of convertible notes. Second on October 23, 2018. Form ESOP For issue of ESOP sweat equity shares, share against exercise of ESOP by an Indian company to an employee resident outside India. Form DRR, issue transfer of depository receipts. Form DI, reporting of downstream investment, indirect foreign investment in a company or LLP. And third is not yet available, that is Form INVI, reporting of investment by a person resident outside India in an investment vehicle. Moving forward, we will discuss the process involved in filing of Form FC-TRS, FC-GPR, ESOP, CN and DRR. The process begins with the approval for issuance of capital instruments or convertible notes or employee stock options to a person resident outside India in the board meeting of Indian company, or date of transfer of capital instruments or convertible notes or employee stock option or remittance of funds between a person resident outside India or within India, whichever is earlier. The next step is filing of relevant part of SMF. For filing the desired return, log in into the SMF portal and reach your workspace. Click on drop-up down menu, return type, select the desired return and click on add new return. The user will be prompted to enter the required details in return, including SIN, company name, PAN number, application date, entry route, applicable sectoral cap, statutory ceiling, and whether the foreign investment received is for the specific project, manufacturing unit, or plant. Specific details like issue details, foreign investor details, amount of issue, particular of issue or transfer, and the shareholding pattern as applicable are also required to be entered. Now, the purpose and timeline of each return are: Form FC-GPR is required to be filed within 30 days from the date of issue of capital instruments. Form ESOP within 30 days of closure of the issue. Form CN within 30 days of issue or transfer of the convertible notes. Form DRR within 30 days of closure of the issue of the Indian depository receipts. Form FC-TRS to be filed within 60 days of transfer of capital instruments. Post filing of the desired return, the AD bank of the entity shall check the accuracy and correctness of the details entered. After being satisfied, the AD bank shall forward the return to RBI for its approval. On its approval, AD bank will be instructed to debit the charges from the bank account of the applicant, and an approval mail will be received by the applicant on its registered email ID. In case the return is rejected at any stage, the entity shall receive a discrepancy mail from the respective authority, and thereafter the entity needs to file a fresh return, and the same process would prevail afterwards. If the concerned return is not filed within the specified time limit, that is 60 days or 30 days, as the case may be, there can be two consequences depending upon the event date of the transaction. If the said return pertains to a period prior to November 17, 2017, then compounding mail would also be received from RBI at approval stage, and the applicant need to apply for the same at the earliest. The compounding fee matrix and the process of compounding is detailed in Master Direction number 4/2015-16 on compounding of contravention under FEMA 1999. And if the event date is on or after November 17, 2017, the entity shall be liable to pay the late filing fees as per FEMA transfer or issue security by person resident outside India Regulations 2017, whose detail would be also sent by RBI through email. Key points for discussion here are: always check the correctness of entity master details before proceeding with the filing of any form on the firm's portal. Even the fair value of instrument is not mandatory to mention. It is advisable to mention it as per the CA valuation report. Ensure that the auto-populated shareholding pattern is correct. Pre-transaction pattern is auto-calculated from the entity master. Post-transaction pattern is auto-calculated based upon the details provided. All the required attachment of a particular return shall be annexed with it, and the details as mentioned in the return shall match with the supporting attachment. Also, for an Indian company which has received FDI or an LLP which has received investment by way of capital contribution in the previous years, including the current year, should submit from FLA to the Reserve Bank or on or before the 15th day of July of each year. You can refer our other videos already published on our YouTube channel. You may subscribe for our weekly light and monthly light newsletter for all latest updates in areas such as SEBI, FEMA and companies etc. Please follow us on Facebook and LinkedIn page for daily updates by referring the details given on this slide and in the description box below. We have tried to cover all about the concept of the single master form on the firm's portal introduced by the Reserve Bank of India and the process and filing requirements for direct investments received by an Indian company. We request you to share your views and advice on this web series, including the topics that you want us to cover in the coming videos. Thank you.